Hello everybody, this is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, and one of the founding partners of the Dividend Kings marketplace service on Seeking Alpha. On March 27th, not too long ago, I did a video where I was talking about Meredith and showing that I was long the stock and why I liked it. It was offering an extremely high yield, and I think the stock was extremely undervalued. Now, since that time, as of yesterday actually, the company made an announcement to quote-unquote pause their dividend. But they did talk about having a significant long-term commitment to their dividend policy. And as I said in the written portion that goes with this particular video, I really don't know what that all means, but I was actually blindsided by that. I did not expect them to cut their dividend because I felt that their cash flows and their operating cash flows and their free cash flows especially were still strong enough to maintain the dividend. And in the written portion, I talk about a press release, or I quoted a press release, I should say, and I showed, that the company claimed they still had good liquidity and so on. But what has happened since that article was published only a few short weeks ago, there have been estimate decreases, if you will, on the various metrics that I showed. But what really is befuddling me is that the company's forecast numbers are not that draconian and certainly not that much lower. Now, the question is, are they going to continue to drop going forward? And theoretically, somewhere around the first week of May, the forecast right now, based on an algorithm, is May 5th. They will be announcing their earnings. So I'm hoping to see earnings in another couple of weeks. And in those earnings, I would expect to see some, more clarity about what's happening with the company. And like I said in the written portion, I don't know if they're going to suspend their dividend for the whole year, if they're just pausing it temporarily for a quarter and they'll reinstitute it the next quarter and hopefully make up for the lost quarter and still pay the same dividend they did last year. We're still showing a very high dividend yield, and we're still showing the expected dividend of $2.32 for 2020 because no one's really, I think, been able to digest this number. But I do have some updates. And in the original article, I was showing things like operating earnings growth for fiscal year ending in June of 2020 of $6.19. You can see that number's now been dropped to $5.35 right here on the video. So things have dropped, but I still want you to notice that earnings are still dramatically higher than what the company current market price would indicate it's worth. So I still think this stock is worth a lot more than it's currently trading at. I'm looking at a market value that's somewhere significantly higher. Now, if I go to Morningstar very quickly and look at Meredith from a standpoint of what the company is forecasting fair value, they still claim it's a $31 stock at fair value, and the last close, yesterday's close, was $13.02, and it's down a little bit more today. But the point is, we have had a drop in the operating earnings, but the company has still got earnings that are significantly higher than what they were, earning a couple of years ago before they did their acquisition that I wrote about. Then I talked about operating cash flow, and I was pointing out in the video that operating cash flow was covering the dividend. Now, I still believe that to be true. The operating cash flow has dropped. In the video when I produced it, I showed operating cash flow forecasts for 2020 at 652. Today, that number has dropped down to 589, but it's still operating cash flow. Forget about price here for a moment. This is still operating cash flow that's significantly covering the dividend and still gives me a very low payout ratio relative to what the operating cash flow forecast is actually supposed to be. So, I'm still going to say it again. I'm befuddled that the company would, quote unquote, suspend the dividend, but I understand this coronavirus is just a horrible thing. And then last but not least, I also showed free cash flow in the original video. And in that video, I showed free cash flow expectations for the fiscal year ending in June of $4.82. It's now down, the free cash flow is down to $4.54, but that still dramatically covers the dividend. That puts the payout ratio at about $4.54 if they were still paying a dividend. So I wanted to bring you this update. Things are dropping, estimates are changing, forecasts are falling a little bit, but I still believe this company is significantly undervalued. And as I said, the written portion that goes with this video, I'm not really sure what I'm going to do yet. I'm going to wait and see. I expect earnings to be reported in the first week or two of May, unless the company has to delay it because of this COVID COVID-19 virus. It's really everything's so up in the air right now in the market, but I still believe this company is extremely cheap, and that's what I want to emphasize. I think anything that's happening, including this quote-unquote pause in dividends, is still warrants a higher valuation. As Morningstar says, they're looking at a $34 fair value. And I don't consider that number, I'll go back to operating earnings here for a moment, I don't consider that number outlandish. A $34 market value would be somewhere around, probably just slightly less than about 7 or 8 times earnings. And the stock currently trades at 2.28 times earnings. So, even a 34 fair value would certainly be a dramatic upside from where the stock is currently trading at. So I haven't decided what I'm personally going to do. I would monitor this situation very closely. That's what I'm going to do. One thing I've learned about investing over 50 years, you don't win them all, that's for sure. And I haven't really decided yet whether I've lost with this stock or not. It all depends on what happens over the next 60 to 90 days, in my opinion. And then, of course, beyond. But I still think this company has great long-term potential, and they are committed to paying a long-term dividend, again, whatever that means. Anyway, this has been Chuck Carnevale saying thanks for watching. I hope this update was helpful. Thanks again. And if you like what you see here, don't forget to subscribe to our YouTube channel.